Hello and welcome. Today we will look at the volume based on the Wyckoff theory as well as discuss how to read volume in combination with the price, and additionally we will showcase several strategies you could apply for the day trading, swap trading and even scalping. So if you could like and subscribe to the channel and stick around for the full video. Volume is ultimate leading indicator when there is the unusually high volume is the given to the period, which could be 5 minutes, an hour, a day, or a week. When the price trends to continue in the same directions in the future, this particulars applies to all financial markets. When prices are rising, the market will not decrease the purely as the result of the low volume, but will supply move sideways and takes a breather. Considerably, any reversal from the falling market cannot occur without an increasing in the volume, and is sometimes also referred to as the volume climax. Volume confirms a strength of the trend or suggests its weakness, because if the market is rising and the volume increases, then things suggest that we have a strong trend support by the increasing number of the buyers. Think about it. If this was the selling volume coming into the market, then price would fall or perhaps move into the sideways conditions before falling. As this is not the case, we have therefore conclude that the volume is buying volume, and you expect to trend continue. Conversely, if you have the risky thread but falling volume, then this will weaken its logic. If the buyers are still in the market, then this would be represented by the rising volume, and in this example we have the falling volume. So we can assume that the buyers are no longer interested, that trend is running out of the systems and becoming exhaust. This is the first side of the possible change in the trend. The buyers have left the market and may not be replaced with the sellers in the trend. The volume will go with the trend, so expect to see the volume fall away in the pullback of the trend. This is normal volume behavior. The buyers are talking the rest before the re-entering the market to buy once more. Why? Because there's been no selling climax to signal a change to the trend. If we see the following in the uptrend with the ultra high volume bar appearing, the things is a signal that the trend is about to reverse, as volume climax often highlights price reacts. This is particularly true if the extreme volume is associated with no equivalences through reactions in the prices. According to the Wyckoff third law, if the market requires effort volume to rise and fall, if market has failed to the rise with significant volume, then clearly the market is resistance to any future increase, and this volume must therefore be considered to be a selling volume. If it were buyer's volume, then the market would have risen strongly. Here we can see the market has been rising strongly with increasing volume, a positive sign. However, the last bar, the volume has been ultra high, but the market has fallen with the narrow spread price bar. What's happening there? In simple terms, the buyers are no longer interested at this price, and a trend reverse is limited. If the volume bars was the buying volume, then the market would have continued to rise as the previous bar. Instead, it has followed to the rise, and the price spread of the bar is narrow. So this must be selling volume coming into the market. Points where the market trades on the high volume are the points of the strong support and resistance, and the first signs of the change in the trend or breakout volume helps to confirm the potential breakout from the area price congestions. In this example, we can see that we have the high volume at the bottom of the each market resistance, which is suggesting buying or accumulating at these points. The support area confirms this view, so that we finally see the breakout. We have a great signal from our volume bells that this is the genuine breakout and therefore a low risk trade. In this example, the high volume is the top of the each trend, so in this case we can assume that this is the selling volume with the market clearing the region of the price resistance. In this case, as this is the selling volume, then when we see the breakout to the downside, volume once again validates this breakout. As we have seen, the high volume bars or each following attempt to move the higher once again, we have to the low risk entry confirmed by the hour volume breakouts, and market spikes can be validated or validated with the help of the volume. Without volume, we are merely guessing that the future directions of the market. With volume, we have and insight into the market and whether the interest is buying or selling. However, just like price, volume is isolated tells us very little about the market's future directions. All it can signal on its own is interest in a market or event. For this, we need to combine price and the volume target to give us the most powerful analytical tools available, which will reverse the market's future directions. As Wyckoff said, all you need to know can be found in the price and volume. From Wyckoff, I learned that the price alone can only tell you what is market's present technical positions and where the trend is probably headed. That volume determines the trend with more accuracy and detects turning points, but together they form the complicated pictures. Volume express interested and endurance. Volume is the flow of the market. It is what drives the market, and without it, the market will simply drift. Volume exposed the truth of the market. Volume reversal convincing in the market. If the market is moving higher but with falling or low volume, then this is the simple telling us that this is not a genuine move. Equally, if the market is falling with the falling volume, then once again this is not a genuine move. I know I'm repeating myself, but this is so simple and powerful. On their own, price and volume only reversal a part of the market information. After all price tells you a number, volume on its own only tells you the interested and nothing else. However, when combined, the true market interested is the world given the clear signals of the both buying and selling interested complete something that would not be reversal by the either on their own. In simple terms, the more people that the particular in a price move, or in our case, the more volume associated with the price move, the more that the price move is validated. When there is a low volume, a few buyers, then our price is simply not validating. It really is that simple. Let's talk about the volume and the news announcements. The markets, as we know, are always full with the news of every type, from the daily release on the foundational and economic data to the political statements of the governments to the last announcements from the central bank. All these pieces of the news are absorbed by the markets and built into the largest price actions. Now, as it's a new information interferes into the public domain, volume reverse an effect of this information on price. By watching the change in the volume as its information is released, we can instantly see how the market are reacting to the news and how quickly the latest piece of the news is being absorbed by the various market participants. What this means is, in simple terms, is that the volume sustainable with the importance of the release. If the volume rises on the news and the prices rises in the trend, then the market is placing significant emphasis on this piece of the news. Clearly, in this case, the piece is being valued by the volume surge. Convincingly, if the volume falls to rise on the news, then the market and the market participants have clearly discounted this item and consider to be unimportant or irrelevant, as they now wait for the next release to arrive. Let's look at a few more examples of how volume plays the key part in the current A&D. Future directions of the market. Volume, high or low, as we have seen, volume is the second most valuable item of the data after the price itself. Large volume confirms market activity, and that makes market participants are involved in the more, including smart money, who bring the highest turnover to the market. When the smart money are trading, it means they are interested in the prices and certain levels, and they literally push the price or the down. A low volume tells you that there are very few participants in the market, and they neither buyers or sellers have any significant interest in the price. In this scenario, no smart money will be involved, and therefore any moves from individual traders will be weak. Volume in the trends value helps us to determine the health of the trend, and uptrend is the strong and healthy if volume increases as the price moves with the trend and decreases when price goes counter trends, correction periods, or the pullbacks. When prices are rising and the volume is decreasing, it tells traders that the trend is unlikely to continue. The price may still attempt to rise and slow the pace, and once sellers take control, which is usually significant by the increasing in the volume, and on the down bar candle, prices will fall. Downtrend is strong and healthy if the volume increases as the price move lower, and decrease when the price begins to retrace pullback upwards. When the price is falling and the volume is decreasing, the downtrend is unlikely to continue. The price will easier continue to decrease, but the slower pace or to start to rise. Volume and reversals when the volume spikes is at certain price levels. Trades known that this was an area of the high interest in that price level. If there is a great deal of the interest, it means the level is the key one. This simple observations of the volume allows the trade to identify important support and resistance level, which could play a significant role in the future. Where volume spikes are extreme, in the other words, larger than the historical spikes nearby, this is generally known as the volume climax. When this occurs, trades should look for the clues for the future directions of the move from the price itself, and this is often followed by the particular candles or price bar pattern. Signal volume spikes can bring the price to the half temporarily and These are often seen during the fundamental and economic announcements on the daily basis. Reversal, however, happened not over a single day, but over the series of the days. If higher than the average volume stays in the market for several days, a huge volume spikes. Volume climax will crown a point of the market reversals. Volume and the breakout volume can help the validations. All kind of the breakouts when the market is consolidating on the low volume. A pick up in volume can slightly that breakouts is due. A breakout occurred to the rise in volume is the valid breakouts when breakouts that attract no interest from the traders occurring on low volume is likely to be false. If you learned something new, please hit the like button since it really helps us out, and subscribe to stay in date with our latest release, and check out our academy program if you want to the future level your trading. Until next time.